Welcome back for another top-notch video. This week, guys, we'll be talking about the week of April 13th through April 17th. A lot of market action going on. As always, our channel is about the TSP, Roth IRA, 401k, brokerage accounts. If you have any of those, we'd like to go over the major indices, which are the S&P 500, which translates to the C Fund, or IVV, VXF ETF. That's one thing we go over. They equal each other. The S Fund for TSP, or VXF for those that are in brokerage Roth IRA accounts. They equal each other. That is small caps. We then go over international markets, which is the I Fund for TSP folks, or EFA for those in brokerage accounts. And finally, we go over bonds, or the F Fund for TSP folks, and AGG for TSP folks, for those in Roth IRA accounts, excuse me. As always, guys, I've been getting some questions about are we a paid service? No, we are not. We just like to show education every week. And we do post our moves in our Facebook page and our Twitter account before that noon deadline for TSP account holders and throughout the day for those that have Roth IRA and brokerage accounts. So follow us on Twitter and TSP. I'll have the links below in the description. Let's get right into it. As always, we kind of go over what we are doing for the week, kind of do some analysis on that, and then take a deep dive into tech charts. So starting right off, we're going to go into our funds for the week. As you can see, for the week we had a very good week. That Friday push really pushed us up. The C Fund and the S Fund were both positive, as well as the I Fund. That is our equity funds, or VXF, IVV, and EFA were all positive. AGG was also positive, so really coming out here, we're seeing some massive gains here for the month of April. As you can see here, up 11% for the month, and the month is just half over, 9%, 4%, big numbers here. The market has retraced almost 50% back of where it was from its highs. Pretty incredible moves. What the big question everyone's wondering now is, could we see a test of the lows? We'll go through some of our charts and analysis and kind of show you guys where we're going to be going from here. If these numbers don't make sense to you guys, we also put them on a chart. So for our TSP funds for the week, as you can see, all our funds were positive for the week, with that C Fund gaining the most, almost 3% gain for the entire week, where the other funds were just about 1%. Everyone was right around 1%, where the C Fund was the best place to be. We did have some of our funds in that fund, so we're very happy for where that sits. One of the things we're going to look at is TSP Talk. This is a website you can check out. Tim Crowley does some comments on that site, so please be sure to check them out. We like to kind of go over his commentary and look at some of his charts. One of the things that he showed on his charts, which was interesting to me, was we got above the 50-day moving average, which is huge for the S&P 500, IVV, or the C Fund. Now we're approaching this open gap. Open gaps tend to be filled. We have a couple on the top here, 3 on the top and 2 on the bottom. This looks kind of like a bear flag we have going on, so we want to be careful with that. It did pop above that 50-day the 50-day moving average, but now the next thing we have is that 200-day moving average. That's kind of where we were thinking about selling some of our funds off. But we'll have to wait and see where charts are at and where we'll do. We're looking very closely on our 4-hour charts. I'll show that a little later on. But this setup looks just like we have some resistance coming up here. Want to see this open gap filled, and once we see that, we would be at the top of this bear flag here. We could see it drop to the bottom of the flag, or even farther down to fill these open gaps. It's kind of what we're seeing right now. Please let us know if you have questions about the C Fund. Moving on to the S Fund, or VXF. I said VXF earlier, I meant IVV. VXF is the small caps, not to confuse you guys. So IVV is what we were talking about with the S&P 500, which was up here, and VXF down here is what we're talking about for the S Fund, and this is the small caps. With small caps, not a very good picture. As you can see, we have not reached that 50-day moving average, kind of like we didn't reach the 300-day or the 200-day moving average back here. We do have some of our capital in this fund. Seeing a very large bear flag here with a lot of resistance. 50-day moving average has crossed. Hoping to see that cross this week. We'll have to wait and see, and I'll show you on our technical charts what that looks like. Moving on to EFA. EFA has a lot of movement. We're seeing kind of that bear flag in here again, we have not crossed the 50-day moving average. We have an open gap up here. We filled this gap, which is good, but two small gaps here to the bottom, which tend to be filled. So we're gonna have to wait and see if this can make this resistance and fill this gap, or come back down here and fill these two gaps and do a retest. Yet to be seen. And finally, with bonds or AGG, what are we seeing? We saw a large drop to the middle of March. It shot right back up to where it was, and now we're getting very close to that closing high, but we can't seem to hit a higher high with this, so we're going to be watching this very closely this week. Moving into our technical analysis, the first thing we like to look at is IYY. This is a general market fund ETF. It has all market participants included, so we like to look at it just to kind of get a general sense of what we're seeing. One of the major things we're seeing is this 200-day moving average has definitely started to almost peak and head back down here. That's a negative sign there. Our 50-day and our 20-day moving averages are below it. We are above that, very close to the 50-day moving average, which is a very positive sign. On the technical charts, one thing that we found very interesting on the weekly, as you can see, we are moving from that negative energy. The oscillator, the derivative oscillator, is moving off that negative energy here. As you can see, moving up out of the red bars, hopefully get back into the green bars, and when we see it start to come out and move up, we see price move up as well. So price is starting to move up as well here. Our PPO line is starting to turn around. If we saw a cross here, that'd be very bullish for IYY. So we're waiting to see what is going to happen with that. That is long-term charts. On a mid-term basis for IYY, as you can see, we're already in the positive here. Our PPO line crossed our moving average line. When it crossed, positive gains here in price, doing very well there. Our derivative oscillator went from negative to positive, doing very well there on a mid-term basis. And then finally, on a short-term basis, very interesting. One of the more interesting charts we've seen. Typically, we're waiting for this chart to cross over. It did not cross over in the beginning of the month, and it has not crossed over in the middle of the month, and it's starting to move back up. Now, when we had that move back up towards the 6th or 7th, saw an explosion on price here, way up, and we're hoping to possibly see that again. We're watching this 4-hour, the short-term chart, very closely, especially since it's very close to these resistance lines, that 50-day moving average. And if we can blow through that 50-day moving average, get back to 200-day moving average, that'd be great. This is right around where we sold, where we got back into stock, so that would be a great point to see what charts are doing. That's kind of our break-even point, is right around here. So we'll have to wait and see what happens with that for IYY. That's IYY. Moving on to our next chart, which is IVV, or the C fund. Looks very similar here with the C fund, about to cross that 50-day moving average here on this chart. Like again, I said, we sold right around this point here. This is negative with the 200-day moving average. No real trend line that is going up, so that's not a positive sign either. Want to see if we can break resistance here on technical analysis for IVV, or the C fund. Another really interesting chart here, as you can see, moving up out of that gap there. This is 1, 2, 3, 4 weeks of positive movement now on this chart. As you can see, the derivative oscillator is starting to come out, price is coming up. The PPO line is moving upwards towards that moving average, waiting for that cross. That cross will be a big deal if we can get that on a weekly long-term chart. That's the last indicator we need to feel real safe about where our money is at. On a midterm basis, real good chart looking here. Derivative oscillator moving from negative to positive. No negativity going back down, which is good. Price is moving up here. We're within the Bollinger Bands, and we have a PPO cross back on the 7th, doing very well for a midterm basis. On a short-term basis for IVV, or the C fund, we came very close to a cross here on the 3rd, did not sell. We were waiting for that to change. Oscillator was negative, decided to hang on until the PPO line crossed. It did not cross. Saw a big upward movement with price, which is prices up here. Then we saw the derivative oscillator start to drop off again here. Price did not react to that, so we were very cautious to watch that, waiting for our PPO line to cross. PPO line never did cross. Saw a little negativity here on the derivative oscillator, and then it's starting to take off again. If we see another thing like this, we could see another bounce of maybe I would say 3-4% back up. That would be excellent for our charts and what we are looking at moving forward. That is IVV. Moving to VXF, or the S fund, small caps. Okay, small caps does not look as good. Look at that. That is quite that bear flag we saw looking on that other chart. Kind of nasty looking, not close to our 50-day moving average or our 200-day moving average. Seeing a breakdown there of our charts on a technical analysis, though, when we look at VXF or the S fund, we did have a cross here. We didn't sell because of the IYY indicator. Sure enough, just barely crossed here, and then we saw it pop right back out there on a 4-hour chart. That's the smallest chart, the fastest moving chart. So we're in for probably another really good week, guys, moving forward for VXF, and we're going to hold on to that fund. As far as the midterm charts go, we are looking at a little bit of a drop there from the derivative oscillator, drop from 950 on the green there to 9.49. So that's just a tiny bit of a drop, and that is a closed chart. So wait to be seen on what happens with that. And then on a long-term basis, very good things here. As you can see, derivative oscillators coming on the way out. PPO line is starting to move back up. Good things there, guys. Very good things for VXF. EFA, as you can see here, big drop off, not close to that 50-day moving average, not as clean as a chart. Looking at kind of a bear flag here, waiting to be seen what will happen with that. On a chart analysis, long-term basis, starting to come out here, which is good. Not as recovering as much as the S&P 500 or small cap, so we haven't been involved in that. As you can see, we're starting to see some downward movement on our derivative oscillator from a midterm chart. PPO line is still above that moving average, still in a positive manner, but still not gaining as much as what we've lost in the past there. And then finally, on a short-term basis, starting to come back up here. Line has not crossed yet, so that's a little more cautious of why we want to stay out of EFA until we see a clean cross here on a short-term chart. Finally, we have AGG or bonds. Huge moves in here, guys. Look at the waterfall effect here in March, and then the price just shot right back up from 106 to 117, just a month. That's an incredible move for bonds or AGG. Very good place to be or have your money if you were to have sold up in this area here and then rebought in this area here. From a chart technical analysis for AGG, long-term basis, we are seeing this weekly chart couldn't even react quick enough. As you can see, drop below that line there. Couldn't even it was already on its way back up. Our oscillator didn't even catch it fast enough. You would have bought right back in here in this time frame, and that would have already been back towards the top. So you wouldn't have gained anything with AGG with the indicators that we use. PPO line also crossed right around this time for a long-term basis. Looks to be in a good position moving forward with this fund, a good safe fund to safeguard capital. Keep it away from that G fund if you're in TSP. Move to AGG if stock funds are not doing well. As far as a midterm basis goes, very, very good here. Very awkward to see that PPO line cross back here where the oscillator did not cross back here. Kind of sketchy. Usually they cross right around the same time frame. We start to see price react there. Price reacted over here. It started reacting, and we didn't get green bars until here. That's a long ways away. That's very interesting. Kind of a broken chart there for the midterm basis. And then on a short-term basis for our AGG funds, as you can see, we have a cross here, so we're not involved in AGG just yet. Oscillator is starting. We see a fake out right here, so where we see 1 or 2 bars before it starts to cross back down. So that's something that we are just not interested in. Usually there's a little bit of violence after a fake out, and since we have the PPO line down, we're probably going to see some negative activity for AGG this week coming forward. Again, if you guys have questions, go ahead and write those in the comments below. Really appreciate you guys. Please like, subscribe, or share. We'll show you where we're sitting at for our investments for this week. Top Notch is currently sitting very well for the week. As you can see here on our charts, we are sitting at only -3% for the year. That's very good, not very much loss at all. 3% down is not bad compared to stock funds, which stock funds are sitting close to 10% down for the year, 21% down, and 19% down. So our 3% down is not that bad. We feel like we're in a good position here. We'll have to wait and see where charts go from here to see if they do a test of the lows, or if they don't. Right now, it doesn't look like that. We're going to continue to stay in our equity funds. As you can see on our charts here, we are involved in 100% equities for the time being, with new funds going into those equity funds. And then finally, again, if you guys want to follow our moves or know when we make our moves, please subscribe to our Twitter account or our Facebook account. And this video is only for education only. Again, really appreciate you guys, and hopefully you guys can navigate these markets. That's another top-notch video. We'll see you guys next time.